In this video, we will look at the outlook for clean energy stocks during the Biden administration. My name is Kirby Arcundif. I have a Ph.D. from the University of Illinois at Urbana-Champaign. I'm a chartered financial analyst and a certified financial planner. I currently work as a portfolio advisor and retirement strategist, as well as an adjunct professor of accounting and financial management for the University of Maryland's Global Campus. There are many who believe that clean energy stocks will do very well during the Biden administration due to its support for alternative energy, its dislike of coal, and upcoming bills like the infrastructure bill. So for the purpose of this presentation, we're going to see how clean energy stocks did under the Obama-Biden administration. What we're going to look at is the ALPS Clean Energy ETF, ACES, are at least some components of that, since ACES itself was not around during the time period of Obama-Biden, as some of its components, Sunrun, Enphase, and Net Energy Partners, were not. But there were other components that were around: First Solar, Plug Power, CREE Inc, Universal Display Corporation, and Northland Power. So we're going to look at each of these individual stocks and see if they outperformed the market during Obama-Biden. So during the first 2 years of Obama-Biden, the Democratic Party controlled the House, the Senate, and the presidency. They should have been able to get past about anything they wanted. They did get through major bills such as Obamacare. But clean energy stocks in general didn't rally significantly during that time period. Currently, they have very high valuations. The only thing that seems to have a chance at making them rally significantly now would be the upcoming vote on the infrastructure bill, if it includes enough support for clean energy. We see once again during Biden's administration, he has full control of the government, the Senate, the House, and the presidency, as occurred during the first 2 years of the Obama administration. After 2 years, on the other hand, they lost the House to the Republicans, which may or may not occur in the upcoming midterm elections. One of the components of the Clean Energy ETF is First Solar. First Solar peaked at $285 in July of 2008 before Obama was elected, perhaps in anticipation of Obama's elected. Then it dropped significantly and had a slight recovery. By the end of Obama's first term, the stock had dropped all the way to $19. So you can see in 2008, well before the election, we had a peak on First Solar, and then it gradually just sort of decayed away. So whatever prospects and whatever support the Obama administration gave solar, it did not positively affect the stock. In fact, it did abysmally bad. Another alternative energy stock, Plug Power, hydrogen fuel cell company, did very well during the dot-com bubble in February of 2000. It started dropping after that and did not really even notice Obama's election and just kept dropping continuously. So you can see another disaster. Plug Power just kept going down. LED stocks, on the other hand, did do better during President Obama's term. This is probably due to the Department of Energy mandates, which attempted to get rid of more traditional incandescent light bulbs. It was another dot-com bubble stock. It peaked at $97 a share in March of 2000, dropped to around 10 after the bursting of the dot-com bubble, went to as low as 16 by the time Obama was elected, but then it did rally significantly during Obama's first term in office, but then decayed back down again. So we had a huge increase in CREE and then a drop. Universal Display Corporation was also a dot-com bubble darling, peaking at $30 a share in June of 2000, before dropping all the way to $5 a share by August of 2002, going as low as $6 during Obama's first term, but again, probably due to the light bulb mandates, it rallied significantly all the way up to $55 a share by March of 2011, before settling to about $30 a share, a little bit under that by the end of Obama's first term. So Universal Display Corporation did do reasonably well, in fact, quite well under Obama, unlike most of the other alternative energy stocks. Northland Power is a diversified Canadian green energy company. It also had a significant run-up during the first term of the Obama-Biden presidency. It started about $10 a share at the beginning of Obama's first term in 2009, rallied all the way to $20 a share by October of 12, and has done well until today. A contributing factor of this could be the 2009 Recovery Act that had a $90 billion subsidy for renewable energy. So you can see Northland Power bottomed right at the beginning of Biden's term before doing extremely well, doubling during that term. We will now proceed to look at what has happened so far during the Biden-Harris first term. After the November election, the ACES Clean Energy Fund skyrocketed in value, peaking at an increase of over 70% in early February. But since then, enthusiasm for clean energy stocks has decreased drastically, and the ETF has come back down. And so far, since the election, it has now underperformed the market with only around a 23% rate of return versus 35 for the S&P 500 and close to 37 for the NASDAQ. We can see since the inauguration, the performance of the ACES Clean Energy Fund has been abysmal, with a 26%, close to 27% loss versus around an 18% rate of return for the S&P 500. What about individual components of the ACES fund? Well, since the election on November 3rd, about half of those components have outperformed the market. Those would be Sunrun, Tesla, Plug Power, Acuity Brands, and Enphase. But again, most of that outperformance occurred before the inauguration, as there was enthusiasm for these stocks. Since the inauguration itself, again, that outperformance has largely gone away. So if we proceed going from November 3rd, the election, to January 20th, the inauguration, since that time period, only AYI, Acuity Brands, a lighting company, has continued to outperform the market with around a 78% rate of return. The rest of these stocks have done abysmally bad, all of them having negative percent rate of returns, with the worst being losing 50% of its stock price for Plug Power. So these have tended to be very poor investments since the inauguration. What about the other five largest stocks in the ACES Clean Energy Fund: BEP, OLED, NEP, First Solar, and NPI.TO? They all underperformed the S&P 500 after the November 3rd election, the worst being a negative 17% rate of return from lighting company OLED, when the S&P 500 performed around 27%. These companies continued to outperform after the inauguration, the best company being First Solar and making a 5% rate of return versus close to 18% in the S&P 500, the worst being a negative 32% rate of return for lighting company OLED. The outlook for clean energy stock still does not look particularly positive. The price-to-earnings ratio on most of the stocks is negative or rather high. For example, CREE has a negative PDE, Enphase PD of 63, First Solar 39, OLED is somewhat reasonable at 33, NEP somewhat reasonable at 35, Plug Power is negative, Run is negative, Tesla is around 400. There are a few energy stocks with reasonable price to earnings ratios, like the Renewable Energy Group, REGI, a biomass company with a PD of 14, and also one that has done rather well, Northland Power only has a PD of 25. So most of these are still well above the average of the S&P 500. Some have good growth rates, some don't. It doesn't at least seem logical to me that they're going to do terribly well in the future unless the infrastructure bill is the $3.5 trillion level, and probably even beyond that. You would need to have a lot more restrictions on traditional energy forcing people into these. This doesn't mean that government intervention cannot have a strong and positive influence on stocks. When Obamacare was passed, it was extremely kind to health insurance companies and also to record reporting companies. Good examples of this are Cigna Corporation and Cerner Corporation. If we look at the performance of these stocks, Obamacare was passed in March of 2010. So after Obama was elected, these stocks did start to outperform the S&P 500. And after Obamacare was actually passed in 2010, they skyrocketed. Cerner Corporation going up to 300% and Cigna up 250%. So what Obamacare did is it forced everybody to buy health insurance. If you are forced to buy a product, then the company, in this case Cigna selling the product, can charge you about anything they want to for it. So naturally their prices go up. Obamacare also forced doctors to purchase the record reporting system. And again, a company that is selling a product you are forced to buy can charge whatever they want to for it, and therefore Cerner went up drastically. In the case of forcing the doctors to buy this product, the doctors, many of them had the response of saying, this is too expensive, we're all going to retire. So there were mass retirements, particularly in private practice. Smaller private practices in rural areas simply couldn't afford the $100,000 plus fees they had to pay for software to Cerner. So a lot of them went out of business. Others closed their private practice and then went into large practices with multiple doctors or working for hospitals. So the net effect of Obamacare was to decrease the access of health care to individuals, since a lot of doctors vanished, but to increase the profitability of insurance companies and record reporting companies, and also concentrate the industry more into hospitals, who therefore would be able to probably pay the doctors less money and increase their profit margins, even though they still had to pay for the insurance reporting system with Cerner. The only way I can see of the alternative energy stocks taking off like this is if you had extremely strong restrictions on the use of traditional energy. You would have to sort of outlaw oil and coal, which they're working on. But of course, right now, the best alternative to electricity is for people to do things like heat their homes with natural gas, or if the price of that went up too much, even just go back to burning wood. There are mandates, of course, that are requiring electricity companies to produce a certain amount of their electricity with alternative energies, and this is increasing electric costs. I just got a letter from my own electricity provider, Ameren, that they're going to increase their cost by 12% next year to help pay for alternative energy. And of course, my electric bills do keep going up, and I do have electric heat, but the rational thing to do at this point is then get rid of electric heating systems and go with gas-powered furnaces, which would be roughly a third of the cost. So since people have that alternative, it is unlikely that these alternative energy stocks are going to take off in the near future. I also discussed this issue in an article on Seeking Alpha, which is referenced here, and I have many other videos on my YouTube channel on this and similar topics. I thank you for watching this video.